Today, we're looking at a major development in the EV industry. Rivian Automotive has agreed to pay $250 million to settle a class action lawsuit filed by investors, stemming from allegations tied to its November 2021 initial public offering. The company announced the agreement while emphasizing it denies any wrongdoing and that the settlement is designed to allow it to focus resources on launching its next vehicle, the R2, and navigating a broader EV market slowdown. The lawsuit alleges Rivian misled investors regarding vehicle pricing. According to court filings, the company's early pricing strategy for its flagship R1T pickup and R1S SUV, as represented in its IPO prospectus and early investor communications, did not fully disclose that unit costs far exceeded the retail price set for these models. In early March 2022, the company raised retail pricing for several models, creating controversy among customers and investors. That week, the stock reportedly dropped by approximately 39%. These actions became part of the investor claim that Rivian's public statements were materially misleading. Under the terms of the proposed settlement, subject to court approval, Rivian will pay $250 million, of which $67 million will come from directors' and officers' liability insurance and the remaining $183 million from cash reserves. The settlement covers purchasers of Rivian's Class A common stock between November 10, 2021 and March 10, 2022. Rivian said the agreement is not an admission of fault or wrongdoing, and the settlement will allow the company to move forward without ongoing litigation over those claims. Why this matters? For Rivian, the settlement comes at a pivotal moment. The EV market is undergoing increased pressure. Demand concerns, supply chain costs, loss of tax incentives, and fierce competition from legacy automakers and emerging players. Rivian is preparing to launch the mass market R2 SUV in early 2026, targeting a more affordable price point and broader volume. The company simultaneously announced cost reductions, including a workforce reduction of about 4.5%, over 600 employees, to align with its strategic pivot. From an investor standpoint, the settlement removes a significant overhang of litigation risk. If the lawsuit had proceeded to trial, potential damages could have been far higher. However, the settlement itself still means an immediate cash outlay, which, in the context of Rivian's net losses and cash burn, adds to the operational pressures. Rivian reported a net loss of approximately $1.1 billion for its recent quarter, and while revenue is growing, margins remain under serious stress. To understand how Rivian arrived here, it's helpful to trace its journey. Founded in 2009, Rivian became one of the most hyped EV startups, winning backing from Amazon and Ford, generating tens of thousands of pre-orders for its R1T truck and R1S SUV, and going public in 2021 in one of the largest IPOs of that year. At the time, investors believed Rivian was positioned to disrupt the incumbent automakers, but by 2022, macroeconomic headwinds, inflation, supply chain disruptions, cost escalation, and execution challenges started to bite. Price hikes, delayed production, and lower than expected profitability created friction between public expectations and reality. In March 2022, Rivian raised prices on its R1S SUV and R1T pickup in the wake of rising material and logistics costs, but the timing and communication of those hikes became a flashpoint. The investor claim was that the IPO disclosures did not adequately warn investors that the initial pricing strategy was unsustainable given cost structure. This concern formed the core of the securities fraud allegation. Now, as Rivian moves into its next stage, this settlement may mark both an endpoint and a fresh beginning. It clears one legal risk, but the company still faces major strategic challenges: scaling production, achieving sustainable profitability, managing margins in EV manufacturing, expanding charging infrastructure, and contending with global competition. The launch of the R2 will be critical. If it succeeds, Rivian may transition from niche to mass market. If it falters, the company will face deeper headwinds. The case also sends signals across the EV industry and public markets. It highlights investor sensitivity to disclosure, execution risk, and cost inflation. Startups in capital-intensive sectors like auto are particularly vulnerable when expectations derail. And for legacy automakers, the settlement underscores that rapid hype and ambitious promises must be underpinned by operational reality. In conclusion, Rivian's $250 million settlement is a major milestone for the company and signals a moment of shift. The company is acknowledging the past litigation risk, clearing its path ahead, and focusing on what comes next. But the road remains long, the stakes remain high, and in an industry defined by disruption and cost, Rivian's survival depends on execution more than headlines. We follow breaking news, so follow us and subscribe to stay current.